Gagan sir, video is fine.
Screen is shared.
Yes, screen is shared. There's an issue with your video camera.
I think I will log in then from the camera separately. Slide share is on.
Yes, sir, it's on.
You can see from the slide is being shared, right?
Yes.
I am turned on from the.
Please mute your mobile phone. Lower the volume.
Little mute, I think.
उसकी volume low कर दीजिए.
I think I've done it 0. Now it's okay.
It's okay now. No echo problem.
Okay, fine.
Video.
Now audio, video, both are there?
Yes, sir, both are there.
Chalo, perfect. Sundays are best than Saturdays, I believe.
Yeah. Most of the people are working on Saturdays also, so Sunday much better.
So what was the topic for the day in the morning session?
Valuation of non-financial liabilities.
Non-financial liabilities. Good. Good.
There are around 34 participants.
As of now.
Yeah, and in total, I think there are around 90. So we'll just
Total how much?
around 90. 90.
90. Acha. So 1/3 is the strength as of now.
Most of the people have just logged out from the previous session, like 10
Okay.
minutes up.
Okay. Okay. It got a bit delayed. So webinars have become a new normal for all of us.
Actually, everyone has become so using the technology.
Yeah.
On Zoom.
And I think it will continue for good times to come.
IVS has also given permission till like 30th September.
Okay.
So it will extend because government won't allow the grouping and all. So it would extend till the end of the year.
But I think it's good option because it gives you a lot of flexibility, a lot of agility in terms of timing, in terms of zero movement, in terms of knowledge sharing. Sitting at one place only, everybody is getting
We are able to
informed.
organize more webinars and more knowledge sharing.
Yeah, 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 yeah. It impacts for all of us, I think. Just think of, we would have to take a physical, you know, framework of things and go there and come together and share things.
That's a problem.
Mm.
Traveling.
It's good to see people from across the diaspora of India.
Yes,
You don't get that much of a chance to interact with people. You end up doing the local meetups.
actually. It was difficult for us to organize webinars like where they are available in Karnataka and Telangana.
Yeah, yeah, yeah.
But due to it's becoming easier.
No, good. I think this should continue. At least CP hours and the RBO dissemination of knowledge or curriculum should continue online because it gives a hands-on to lot many people in one go.
I suppose we can gain knowledge like this technology can help. It might be like IVBI give us permission to continue on this as well as live or like face to face.
Yeah.
Both may prevail. No one knows.
So how many participants now? 70. Should we start or should we wait for 5 more minutes?
We can start at 12:35. Just give them 2 more minutes. People
Sure.
are increasing a little bit.
Sure.
12:35.
Sure.
Just
Sure.
announce
Sure.
it also.
Yeah. See, addressing all the three specialist field in one session, in one go is very tough. Justification becomes difficult. Which side are you?
Actually, like searching for topics is also difficult.
Yeah, 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 yeah.
All the classes.
Even for us also, to give the case studies, to give the precedents, to give some corroborative background to it is also, we keep on thinking, are we balancing? Are we balancing for all the three classes of assets?
And sir, I suppose we can start. Most of the people know you, but some are new in this session. Uh,
Okay, okay.
Gagan Ghai sir, he's a very big valuer and a chartered accountant and many various degrees. You can know about him. After the session, we will put his class on YouTube also, as well as the presentation we will share in the group. So the class is all yours.
Thank you so much, Nitish, for the warm welcome. And happy to share, whatever experience that we have gained in last 18, 20 years as a professional in this techno-commercial field, which has evolved as a, very focused line. And now that India is gearing up for more closer and more stricter norms, so to speak. So the responsibility is on all of us that we steer it cautiously, do it ethically, and be standing for ourselves own because we are ones who will create value for us only. Nobody else will create. And I reiterating my yesterday's line is that we all of us has the responsibility to create the value for this profession. So we have discussed some critical things yesterday. I will touch upon some things from there and then carry it over to this special session of report writing and report interpretation by the third parties. So why I have kept it both together because report writing is onus on us as super specialist valuers, but at the same time there is a mirror image on the other side. Who are the consumers of our report? It can be institutions, individuals, corporates, large enterprises, cross border guys. So although we see it from one angle, but it is also our responsibility or duty to understand it from the other side also. So we're trying to kind of make a bridge between the two, what we want to write and what they want to hear and read from us. So there shouldn't be any gap to make it a perfect combination of report writing from ourselves. Again, I've tried to make a judicious attempt that all the three expertise classes of assets are being represented in the presentation, and would be happy to hear your practical issues and queries at the end. The flow of today's presentation, I have kept it very lucid, and just a second. Yeah, the flow of the presentation, I've kept it like discussing about the how and what we do in valuation exercise. How do we start? What is the purpose behind it, and what is the process on a very brief note for entire asset classes. Then we will put a little bit review on the documentation part. Then we will touch upon the guidelines that has been issued to us under the valuation rules 2016, which we all have to adhere to. And in respect of the global standards, how they put light onto these concepts of content of the report and other things around it. Then we will see a brief layout of the report. Again, that is a little bit agile in terms of requirement, but still I took a framework of things and tried to put the report layout in some format so that it gives you a hands-on experience in understanding each sub part of the report content. So till this point, and report interpretations, as I said, we will try to discuss more from the third party perspective, where we can get perspectives from the other side of the table, like the consumers of the report readers. And yes, I have kept these practical issues at the end, time permitting, happy to discuss. I have just mentioned few of it, just few pointers, but then there is no end to it because you all are very senior guys and experts in your own domain and field, and you have been experiencing all these kind of valuations that you've been doing in the past. So every assignment is an experience to us, and similarly, I believe you guys must be experiencing varied kinds of issues and challenges in every assignment, because every assignment is different from each other. So with this, let us start quickly so that we get some time at the end
It's
to
full screen.
discuss openly. Full screen.
Yes, sir.
Okay.
It's at the bottom. There is a on the right. Yeah, this one.
Okay. Let me do a full screen. It's better now.
Yeah.
Visibility. Okay.
Thank you.
Perfect. Perfect. Thanks, Nitish, for the input. Yeah. So we'll quickly move to start our presentation. I think 84 guys have joined. Almost we are there. A little warm up, a little gap from the last presentations. But this afternoon presentations are a little tricky. So let me make it more connected and more interesting for you guys. Yeah. So we start with the basis. We all do valuations day in, day out, right? So these three critical verticals, which defines, the value perspective from an expert standpoint, who we are, like who is doing the valuation. I mean, certain regulations require certain qualifications, certain norms, that this is the guy who will be conducting the valuation exercise, right? So one has to understand that under what regulation, right, the valuation is being conducted. What is the end use of this valuation? What is the purpose, right? So why valuation is being conducted? Any assignment coming to you on the face, first thing you need to filter down to why he requires our help. That is most important, because the entire part of the report writing and content and all those things is secondary. Primary is why. And who is liable to conduct the evaluation? At times client does not know. He might be needing 2 3 different type of valuation of different kind of assets, or different reporting requirements simultaneously in the same given timeline to different authorities. So it is the duty of specialists like us to comprehend, to understand with the client what is he looking at and why. So the more you understand his why proposition, the more you understand why he's going through this exercise, you'll be more able to help him more deeply, and understand timeline of the evaluations. And at times the timeline of the evaluation is also critical. That why, which timeline he is referring to, what value discovery it will happen for that timeline, because with timeline the value changes. So those things have to be very very critically understood, examined, and noted. So I thought to start with this, although you have been doing it, but still, some things need really a good thrust, importance, and focus for all of us. Even whenever client comes to us, we still go back and ask these basic questions as a questionnaire to him. My volume is low. Am I audible now better? Okay. Not yet. Okay. Is it better now? Saying very low volume.
Your audio is fine, sir. There must be some problem in the laptop.
Okay. Okay.
It's fine.
Okay. Thank you. So yes. So I thought to start with this basis of valuation, because this is the defining moment for everybody in each assignment. So friends, whenever you interact with the client on the day one, please confirm these few basic things to move forward from here on, because without this, everything go haywire. So these are the critical pillars of valuation to begin with. Okay, I just mentioned yesterday also that when we were discussing about the valuation scenarios, right? So similarly, stacking down as the some critical purposes for which the valuation has to be done. So when I say transactional, which means there is an undergoing transaction, some buy, some sell of some assets, company is taking place. So the client requires the valuation of that underlying asset or the company as such as a whole. In terms of regulatory, there are certain regulations which say that you have to go through these kind of valuations if you are doing such things. If you are undergoing these things, so you have to go for valuation of such critical asset classes. Again, we have discussed it yesterday on a regulatory framework, on a transactional framework, and on a reporting framework. Similarly, reporting framework, on 31st March every year, you have to give valuations for preparation and presentation of the accounting framework of things. So a lot of accounting valuations, lot of Ind AS compliant valuations has to be done, right? In some cases, friends, there are litigations happening, on the legal side, or there is some special order from the court to get these things assessed for certain particular purposes and reasons, right? So those form part of the legal side of the requirements. At times, there are other scenarios, there are other purposes which are driven, like so to speak, insurance cases, and there could be other driving forces to revalue or value the assets. So I just try to put forth basic purposes broken down into these 4 or 5 subsets for you to at least keep at the back of your mind that how to classify the basis and purposes briefly after considering the initial 3 whys. Who is doing it, why valuation is required, and what is the timeline when this has to be done. So with this, we jump off to typically as a professional, we must prepare some kind of checklist, because for a transactional mode, friends, the checklist might vary a bit. For regulatory and legal, the checklist might vary a little differently. For reporting, the checklist still might vary into different format and shape. So what I suggest you, friends, that you should prepare some kind of small checklist with you, so that whenever a client connects with you, you share those checklists, whatever, I mean, you mean 8, 10, 20 pointers, because it is very helpful for handy to understand the first cut from the client. It seems more professional, number one, and number two, it gives you a more clarity onto the scope of work, onto the inputs that you need to put through, your timelines with the client, and hence the most important part is defining and determining your fee part, because fee is dependent upon a lot of critical things which you will get and try to get from the client in a checklist format. So this really helps, friends. Going ahead, okay, I have just put forth the entire process into one sheet. Like whenever we understood the purpose, we got critical data from the client initially, right? I mean, it depends upon which asset class we are doing, or all the 3 asset classes, right? Then we try to choose the methodology that we need to adopt, right, to do this kind of valuation. For tangible assets, yes, we need to plan for the site visit. Have we got enough data? to go for the site visits, then do the corresponding after the site visit, do the market surveys and understanding how the market is, understanding the local site and values of the land and building there in the nearby areas. And for a P&M, you do a market analysis of the P&M plant and machinery and the technology and the process. Is it current or is it obsolete? All those things. Some critical value drivers that you see while visiting the premises of the client. You notice a lot of qualitative factors which are at times very critical in defining and assessing the valuation of that particular client. The way they have maintained certain things, the way they have put forth things, the way they're saying that they're putting a new plant, but it would be a new plant, it would be a refurbished plant, right? So it all depends upon the interpretation of their wordings and the writings. But when you see things, you see it on your own eyes, with your own eyes, right? And then you corroborate it with your evidence, already in hand, black and white papers or certain statements that is made by the management. And as an expert, then you take a call on it, that what kind of parameters that you need to adopt, what more further deep questioning that you do with the management, what other important market assessment that you need to do to understand, define, and assess your valuation, fine tuning it. And then comes the final reporting approach of methods and then techniques you've adopted, the model that you've adopted, a lot of disclaimers that you need to finalize, limiting factors which is restricting your fair and accurate valuation process, or the value derivation. And then you need to run a lot of back and forth iterations to understand what I'm getting out is not improper in terms of comparing it with different approaches, right? To form a proper opinion of value at the end, and hence put forth all these opinion into a reporting format. I mean, this is the entire journey for all of us, for any asset class. I also say to financial experts that it helps when you actually see the site. It may or may not be required, but it helps, because when you see the actual process, actual machinery, actual the flow, the structure, the size, you kind of try to visualize the entire process and hence the output, because output is coming to the financial side in numbers. So you'll be able to much appreciate the numbers, the receivable cycle, the payment cycle, engagement of people and team. It gives you a lot of visuals which otherwise is not there while doing the desktop things. So this is my personal opinion. I have just kept a tentative list of documents for all the three asset classes into one. It is not an exhaustive list, friends, but then it is just an indicative list, right? So typically we ask for a P&M guys, we generally ask for a detailed fixed asset register. Unfortunately, in lot many companies, these fixed asset registers are not prepared by a engineers or technical specialists. These are being done by the finance guys, accounting guys, so who are not trained and not capable enough of detailing those kind of critical inputs that we as a valuers needed, right? So in most of the cases, you may not be finding typically properly the make and model of the machine, line by line item of the machine, and you may find year wise capitalized cost. That is for sure. Being an accountant, they make sure that overall cost is being capitalized is there, but the breakdown of the items of the machineries or the setups are not there. So at times you get from the client, then that's a good point, but mostly it's little tough for us to get those line by line items from the client. For a civil guy, I think details about the land, what is the type, structure, location, deeds, all those historic documents that we need to get to understand the land history and the changeover, if any, has come. Like the land could be agricultural land or a non-agricultural land, how it is developed, how they've taken the CLUs, registrations, blah 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 blah, to be at a present commercial status. So it has a history of events also in the past. Then any constructions and improvements done since you acquired the plot of land or land at the corner of the road. Then you do the approved maps and property papers, which is recent, which is current, approved by the authorities. You need to check on which the duties have been paid or have been paying regularly. So some of these are very critical part without which your accuracy and opinion of value may differ. So although you go there and measure things, but against a benchmark, you have to have a critical input with you to understand, consume, and then measure there and then do things. There are certain challenges across each one of them. I'll just try to touch few of them at the end of the session in challenges section. In case of inventory, we need to get a list of all the inventory stack, which is raw material, which is finished goods, which is work in progress, with respect to your quantity, with respect to their rates, with respect to their aging analysis, for us to better understand what lies ahead in terms of these things, where we need to put thrust upon, how we need to classify it, and how we need to start the inspection process. Now coming down to the more financial side, in every balance sheet, friends, you will find a lot of uh, loans and advances given for various reasons. So need to understand their critical purpose, why they have given. Is it just obliging any known party, or it is going to a related party within my core promoters network, or it is going for some diversification of businesses, right? So we need to ask for all those details, agreements of the loans and advances given. One of the most critical factors after inventory remains the receivables, which is called debtors, because these are the guys who hold critically one of the largest portion in your balance sheet. So understanding their movement in the balance sheet is very important. What is the credit period fixed with these clients? Because these are ultimately your clients as a customer's clients, right? So what is the credit period fixed with you on a agreement level? What is the PO being issued from them to you? And are they honoring their payment schedule or not? If not, then why? Examine those things from the bank statements. Auditor need to report on these things and balance confirmation on every year. So try to get those things checked from the client, that whether you are getting the confirmation for these debtors every year or not. Then in many balance sheets, you may find non-current investments. These are typically long-term investments given to maybe creating an SPV or large projects together, depending upon the vertical, like in infrastructure projects, in real estate projects, in a lot of power projects. You will see these kind of large non-current investments being given to the other companies, to uh, create larger assets thereby. So you need to understand all those things, why it has been given, and what are the agreements between the two parties to evaluate it. Now, as we discussed yesterday also, that intangibles form a very critical portion of the overall valuation of a corporate, of an entity. These intangibles may or may not find space in the balance sheet. So you need to ask very critically from the management as a separate annexure, that what are their registered IPs, what are their criticalities, what are their USPs as an intangibles. You need to classify intangibles under all 5 categories of intangibles, and understand deeply that is there any further intangible being available which client is not aware of, to monetize it on the platform. And all those things you need to see from a legal perspective, whether he's saying my ABC company is IP, but he's not registered that IP. So what are all those things to be taken into account? You just keep it noting on your questionnaire, and then take that input and benefit when you are assessing your overall valuation exercise. Obviously, valuation date, whatever date it is, you have to have the entire financial stack with you, including the balance sheet. What is the statement of affairs as on that date? And then at times, we need a understanding of the entire historic and entire projections from the client to understand the flow of the business from one end to the other end. And you need to understand the entire business, how it is flowing, top line, the expense categories, the profit categories. Are it they are okay and in line with the industry or not? So all those assessments you need to make over a period of time. So again, this is, friends, are very very indicative list. I've just tried to put forth, keeping in view all the 3 categories here, and it varies from objective to objective and purpose to purpose. So friends, keep a view on the purpose, why it is required, under what regulation, and go there and read the regulation, what is it states, whether it states a valuation to be done by a single method, by a particular method, or it leaves up to your best judgment to adopt and test all the three methods which is there, approaches which is there, right? So see that, and then devise the proper documentation checklist and information checklist from the client, and then proceed for the valuation. So these are all, friends, are building blocks, because as the process of valuation, as you move on from one to another, these form a very critical stepping stone to your ultimate achievement of valuation of opinion at the end of the exercise. Okay. So friends, being a qualified registered valuer, we all have gone through the IBBI classes and tests organized by the RVOs and the various other stakeholders. And I presume personally that you are well versed with the valuation rules. So the starting point of a report content is already you have read, digested, and given in the exam. And this is a snapshot which I have captured from the rule book, which is Valuation Rules 2016. So these pointers, 12 pointers are there as it is in the valuation rules. So anyone who comes to us and asks that, boss, what should be the content of the report, how we should make report, do you have a sample report? I every time show them this list, because this is the minimum basic list that we as a super professionals have to follow. So in any report, in any purpose of your report, these things should be their minimum to abide by the regulations as such under which you are registered. If you're signing as an IBBI registered valuer, you need to abide by these 12 points, friends. And we will be discussing the things around them, and you will see how these points are coming back and forth in our entire discussion today. So first is background information of the assets being valued, right? So what information that you get from the client is the background information that has to be mentioned in the report. Second is the purpose of valuation, right? And appointing authority. For which authority your report will go for the consumption, right? So purpose of valuation again comes at the second point. This is very important, which was not there in any regulation earlier. Identity of the valuer and any other experts involved in the valuation. Now, for example, some assignment came to me, and I got appointed in a valuation of a P&M, right? There I've been, and I saw after inspection that there are some critical assets lying there, like pertaining to a very chemical industry. Those chemicals are very specialized chemicals. They need a very expert inputs and opinion about them. So I reach out to certain experts, a chemical expert, engineer who has a decent set of experience and command on that subject. I'll engage him and I'll ask him for the specific engagement, for his help. He helps me and I consume that his input in my report, and hence finalize my opinion of value. So all these things, in fact, my details as an identity of valuer or a little brief about me has to be mentioned in the report, along with any other expert whom I have engaged in my course of valuing that underlying asset. Disclosure of valuer interest or conflict, if any. This is, friends, old phenomenon. If you guys must be knowing that you are issuing valuation reports under old regulations and sections of the different acts. So we typically give that declaration that we do not have a vested interest in the company that we are valuing, or the connected people around it, and so forth and so good. So this remains the standard clause because it gives you a more ethical perspective, independence and authority with which you are giving a valuation report to the client. So it should form a part of your report also. Now, friends, date of appointment, valuation date, and date of report. We touched upon this topic yesterday also, and it is very important that when was your date of appointment, right? For which valuation date you are being appointed, right? And then your date of report. I would like to comment here that you should always put date of visit also, because that is also relevant from taking a perspective, because in my experiences, a lot of things changes between the valuation date and date of report, right? So your visit date falls between the valuation date and the date of report generally. So you have to see that scenario. Sometimes valuation date may collide with your date of visit also at times. So I mean, make sure that you also mention a date of visit also whenever you go there. It is better. So these are minimum criteria, friends. Indicative, right? These have to be there. If you want, you may put some additional category or criteria add on to this, but you should not delete anything from this. These are minimum set standards. So you may add, date of visit along with it. Then comes your inspection findings. When you go there, you go experience the facts of situation, how you enter the organization, how you get that experience, what all things happen actually, uh, because you consume lot many things from your inspection, and then your valuation opinion is henceforth impacted by that interaction, by your experience during the inspection, and investigations undertaken by you and your team, like market surveys, like local assessments, like talking to competitors, right? I mean, it could be host of things depending upon the objective of the evaluation. So these things have to be forming a part of your critical report, because these are very critically influencing your opinion of value sometime or the other in the report. Okay. Next is nature and sources of the information used or relied upon. Okay. So, friends, what are the sources of information? One is you're asking the client himself directly, the management, about the checklist. Then your sources of information is the team of employees or other guys that you meet on the site, right? Then it is your experience on any expert that you are taking into account. Then you are doing some market survey and assessments. So all those information becomes corroborative evidences. At times there are a lot of published data from a company's perspective in the open domain. So you take a lot of things from here, from there, from here, from there, and try to put forth and make sense about the company's overall background and understanding. So whatever information that you're taking or fetching it from, please mention the details right down in the report itself. Then it comes to your own processes. What procedures we follow, in carrying out the evaluation. What is our process? How we move forward after gathering such data, after inspecting the client side, after getting the market survey done. How? What are procedures, including the evaluation standards? So, what is the referring standards? Have you complied with it? Have you taken into cognizance all the departures? Everything, from A to Z. You have to understand, see, and write all those things in the report for a person to understand you've gone through those things. Yes, every report with an objective has a restriction, right? How and when I can use the report. So it has been consumed for the said objective, for the said timeline, for the said authority, right? So you may put forth all those things, and this is a mirror image of your scope of work. When you're appointed, your scope of work is defined, and restriction, if at all, is there, you have to clarify it. Then major factors that were taken into account during the evaluation. Obviously, qualitative and quantitative, both the factors that have a bearing on the overall opinion of value, that you need to state there clearly. And yes, at the end, conclusions. How you concluded your valuation assignment in totality by going through all the detailed process we have been discussing from last some time now, and how do you arrive at value from different approaches, methodology that you adopted, how are you summarizing it, so this is a very important topic, but it is not and, friends. It says and. The last line is very important. Any caveats, any limitations to your valuation report, any disclaimers, to the extent they explain and elucidate the limitations faced by us, because in terms of making the evaluation report, there are certain critical things that you may require or need, but there are certain restrictions because of XYZ reason, right? For example, you are supposed to visit the 4 sites of the company, right? but one site is taken over by the local authority or magistrate or enforcement directorate or whatever, right? So you're not able to access to that site. So you have to state all those things in your report, that we were not able to access, but we are taking the valuation of so and we are not taking the valuation of so and so. We'll presume so and so and so and so, something like that, so that you are very clear that tomorrow if any issue arises, this is being stated in your report that because of these reasons we have not been able to access to such and such asset, and hence we are deriving the value on such and such basis. So if you understand these things, is the entire walkthrough of the evaluation exercise, from the day the assignment, the client touches you with the scope of work, and the day you will give him the report, the entire experience is being expressed in one form or the other in these 11 and 12 points. Now, these points could be chronologically arranged in any order you want to frame any report. It could be structured either way. It could be formatted in any way. So every report writing can be a different report writing from an individual matters, from individual valuer to valuer. So there is no one good form or shape, friends. It is all about the content. So as per regulations, if you are detailing this minimum content in the report in any format and shape and structure, you have fulfilled your moral and ethical duty. But having said that, we will discuss other aspects of report writing also in conjunction with the evaluation rules, because these are the framework. Because what is given in the regulation is the first and prime most importance. Any other thing around it will build over it. So let's move on to what other people are saying around the report contents and writing. I've just kept, IVS International Valuation Standard 101 talks about the scope of work, and 103 talks about the reporting. So why am I mentioning this IVS? Because it is the most widely applicable valuation standard across the globe. So what does it has to say? So in the scope of work and in the reports writing, it mentions few items which are very similar to what valuation rules have already mentioned there. So I'm just brushing it for your ease and comfort, and so that you can corroborate the relation between the two. Again, IVS says that identity of value must be clear, right? Identity of client must be clear. Assets being valued have to be determined. Valuation under what currency? Because it is global framework of things. So what currency it has been to valued? Authority for which it is being used, other than the client, it has to be mentioned there. Purpose, again, it came back to the purpose of value, right? Now it talks about the basis of value. And basis of value, I mean, your methodologies and approaches, when you adopt, you have to mention the basis of value, the premise of value, right? So it talks about specifically differently here. Valuation date, sources of information, significant assumptions. Okay, it talks about significant assumptions here differently, but in valuation rules, it was already discussing all the limitations, assumptions. You have to mention in the report. So obviously, whatever inspections you have done, whatever basis of forming the report you have taken, whatever limitations you have to be there, have to be put for there. So if you see, 99% or 100%, I can say, is all similar to what we have framed in the valuations rule 2016. Now coming to the report writing part of the IVS. Report writing part of the IVS again says these critical 6-7 pointers. The scope of work performed. What was the scope? As mentioned in IVS 101, this is the scope, friends. These pointers, right? So it said in one go, the scope of work performed. And then it is adding on to the approaches adopted. Under each approach, methods applied, the key input used to process that information, any assumptions made again under those methods and approaches, and conclusion of value and date of report. Now, friends, again, you just sum up IVS 101, scope of work, IVS 103, reporting, and see, go back to the valuation rules. Almost everything is there in some form or the other, in some line or the other. So kind of it is covering all the more similar things here and there. So you may go anywhere, but similarity and the bottom line and the cardinal principle remains the same. These all functions, these are 12 areas that you need to focus upon and give your report around it. These are the minimum requirements from any perspective. So going ahead from here, friends. Okay. So now we are jumping onto the report layout, friends. The report layout I have divided into three main sections. One is the preliminary section. We will talk about the main body. Then we will talk about the supplementary sections here. So these three sections I categorically divide into three sections because of ease of understanding and making the reports. Again, this is just for your understanding perspective. It is not a fixed template or a rule-based template that you need to go about like this only, right? You all have a good freedom to make the report in whatever structure and format you may like. Coming to the preliminary portion, it talks about the title of the report, main title, what assets you're valuing, what company you're valuing, what value drivers out of it, right? And that is the heading of the, so this is the first sheet, the heading of the report. So this talks about that title, right? Then the second sheet comes as the index or the table of contents as we speak. What kind of detailing that we've used. So all those, report layout, whatever preliminary, main body, and supplementary are there, would be forming part of the table of contents as the index 1, 2, 3, 4, 5, 6, 7, 8. And friends, some people include summary in the starting, some people may not, but I have kept it as a option to give anybody a bird's eye view, right? So anybody who's got a 10, 20, 50, 100 page report in hand, he will not skip through here and there, right? In one go, in one sheet, he will get a bird's eye view that what is all is talking about on a summation level. Obviously, the report is much detailed to talk about, to discuss many things as we discussed briefly just now, but it is helpful for any reader, beneficial to give you an abstract of summary in one go in the starting only, just after the table of contents. So with this, we will be covering we have done the preliminary, starting point of the report, which includes the title, which is the main page. Then you come to the table of contents, and then a brief synopsis or a summary. Then we need to start with the main body. Now it is most detailed portion here, and it includes from left to right of everything that we go through, that we have discussed just now. So I have broken down the main body again into 3-4 critical sections. So one is introduction. Second is overall review of things. Then comes the methodologies, and hence the conclusion. So let's see what all things we need to go through under each tentatively. Jumping off to the main body. Yeah. So in the introduction, what should be mentioned in the introduction? Obviously, first thing is for what purpose we are engaged. What is the engagement objective under any regulation, under which appointing authority, whom to it be given, whom to, right, to whom, it is given. So under what regulation I am as an expert being appointed, when I was appointed, all those things have to be given in the brief specs. Which company has to be valued, for which, time period and all. The basis of legal side of the valuation has to begin with. This could be, friends, 1 pager or 2 pager, depending upon the regulation and purpose. Then comes the company, the subject company for which the entire valuation has to be carried out. You have to detail everything from the background of the company to its historic things, legal, financial, technical, and functional. What is the sector that there is into, area of functions, locations, as much detail as you can fetch for your consumption, you should mention it. you should analyze it and put here on record for anybody to review and understand the bandwidth of the company. Then you go next step further. You start analyzing the data given by the client, right? Be it financial, be it technical, be it capacity oriented, be it locational. Your plant may have different sites and different products lines and capacities, right? So you need to analyze everything. Whatever input that you have received from the client, you have to keep analyzing, because once you analyze those things in perspective, then only you will be able to digest that, take the most out of it, and then give your best valuation opinion at the end. Most people does not go and understand the sector, but friends, in today's uncertain and dynamic times, sector understanding and analysis is also very, very critical. Some sectors are rising sectors, some sectors are downfall sectors, some sectors are very new sectors. So it depends upon what kind of sector we are touching upon from a client perspective, and under which sector we are following. In many cases, client may have different segments and different product lines. So sector classification also changes here and there. So you have to see all those things in detail and perspective, under watch all vertical lines they follow, and understand that industry, because every industry has got its own perception in the market, and you have to understand that perception also while giving any valuation opinion, because valuation is a multilateral exercise, and kind of it builds over one another. If you're looking only inside the company, it is one perspective that you gather. If you're looking the company from the outsider's perspective, it will give you a different valuation parameters. You need to combine both internal and external to give you a right mix of opinion of value, friends. That is why sector analysis gives you a top-down understanding. And yes, economic overview is very important, because many companies have critical operations across various continents. So which are more critical components, and countries, and economics going in those countries, and in India also, right? So by understanding that, you'll be able to appreciate the top-down approach, the growth that a sector follows under each country, and then how do you stack down and compare those growth metrics henceforth going forward. So bottoms up is important when you visit the asset by asset, but at the same time, top-down approach is also very, very critical and relevant to understand that how economy, how sector, and how my subject company is behaving into the entire market. Then only you'll be able to understand the criticality of the things therefrom. And also with this, when you do a company and sector analysis, in sector analysis, some people also see the competitive side, how the competition to my company is behaving, which gives me a add-on to my analysis. So it helps really to understand my company from a market perspective, how market is giving the value to the competitors, how they're deriving the value from its competition. So it gives you a very holistic view of the things by conducting and completing this introduction. This may go in many pages, depending upon the size and nature of the business. But this is a very important subset where you begin with engagement and purpose, and then you go by the company background to the sector, and then economic overview. Now, this more of an introduction part. The main part will begin now when we talk about overall review. So by overall review, I mean to state that you must be having a standard checklist of information that you have sought from the client. So you mentioned that input information asked for from the client. You may mention what all you have received from the client, and if there is any limitations in that receipt of information, then how it's going to impact your valuation in respect of the limitations, right? So you need to put forth those type of columns and detailing under each ask category. Friends, these initial category of information or requirement of information is one time. But as you go and inspect the company, as you further deep dive into the valuation exercise, you approach much more deeply the company. You may require some specific queries, some more in-depth information, some more investigative points. Why I am thrusting upon investigative, friends? This is very important. Valuation standards also suggest and tell us that to investigate certain things in detail. I mean, that is up to us, how much detail we want to indulge into. But it doesn't talk about the information per se. It doesn't stop there. It talks about the investigation also. So when the access is given to you, to the information, to the site, to other things critical to the company, it is we as an expert who see with our third eye, what is going on, how it is going on. You interact with their employees of different size, nature, structure. You get to know certain critical information about the company which you are not aware of, right? Then you deep dive into it, you investigate into it, and at times you get certain critical information which will change the value parameters for certain critical assets or of the complete entity as a whole. So be open to any kind of investigative detail, to any kind of corroborative evidence that you may fetch during your course of inspection or valuation inputs. All those specific details and asks that you have done in the past to carry on this valuation has to be put forth detailed in the special detailing section, special information section that you may ask separately beyond your natural input standard checklist information. Then comes your very important point is the assumptions and the limitations. You need to dig down deep into the what critical assumptions for what asset class you are doing. So there are two type of assumptions. One are some general assumptions. For example, uh, for civil guys, you might not undertake the oil, soil, this thing testing. You might not undertake going to the patwari and getting their, land markings reviewed, and many other things, right? So you have to see all those disclaimers and assumptions very clearly. And with the consumption of the information and specific detailing, you also have to state the limitations that you might face in your reporting valuations value over a period of time for this assignment. So this portion is very, very important because it gives you a overall perspective of things. And I've kept it before the next sheet because all these parameters will influence your processing of valuation information and hence arriving at a conclusion of value. Again, some people keep assumptions and limitation and disclaimers at the end, fag end in annexures. Some people may keep after just the summary also. Again, it is left up to you guys wherever you feel comfortable. But I thought that this will give you a much more better perspective of things in the entire flow of the information. So report writing is like what do you call screenplay of a movie. We need to define and understand how it has to be seen and move forward from here on. Okay. Let me bring the charger for the laptop, friends, in a sec. Yeah. So I have kept this structure here because I thought that it to be more important from a flow point of view because a report writing is kind of a screenplay that a report user would understand and see from a flow perspective. So coming to next point, which I have done it. So now methodology, friends. What standards that we have referred to subject to the purpose of our appointment. So we need to outline them. We need to define under what subsections and detailings that we are furnishing these standards. What are the approaches and the methodologies applied under each standards that you adopted, why we are testing the approaches, why we are not using what approach, depending upon the size structure of the asset or the company, or limitation on the use of certain kind of approaches or methods. We need to evaluate all of them and mention that in our report very categorically. We need to mention what approaches, how they are applied across asset classes, then what we have done under each category, and then the methods under what we have used. So it is a very detailed description of things. You may adopt and apply these things, but you have to mention it very categorically. So your basis of value, your premise of value, your valuation methodologies, everything will be mentioned here only under this category. So this gives you a lot of detailing of the report here, because you're not only mentioning the methods and standards, but you're also describing the what you're applying and why and how, because you've already mentioned the brief detailing here in one step before, where the information received, specific questions asked, assumptions and limitation made, and disclaimers, right? Here you will be detailing all these, methodologies, standards applied, and approaches used. But in this, you can break down into different asset class also. So if you're doing it for P&M, it will be different. If you're doing it for civil, it will be different. If you're doing it for finance, it will be different, obviously. Then you will kind of, summarize the values from various methodologies that you have adopted, inputs that you have taken, and if you're applying certain kind of weights, there has to be reason behind it why you're applying certain kind of weights to certain approaches and not to the other approaches, or you are using some specific approach only for a specific asset. Maybe it is required by the regulation, maybe it is more appropriate from your professional judgment. Whatever it is, you have to mention here. And after discussing those things in very detail, the inputs that you have taken from last three sections, and then summarizing that into this section is very important. How you are getting to your opinion of value. It is not just that the value came there and you just put it here. The conclusion has to be arrived from various methods that you have used and adopted in your assessing the evaluation of opinion of value. Again, this forms a very critical focus point for any expert like us. Then comes the supplementary part, the third part of the main project, report layout, wherein we attach a lot of schedules, annexures, used, which are more detailed, in numbers and line by line items, of which the summary part you've already mentioned in the earlier report, mainframe report. So this is the third part, supplementary part, in which you give a lot of details, line by line items, the workings that you have done, which you want to showcase as a part of your, framing the entire exercise. Then you need to reference the references that you've taken, either the market assessment or from the third parties or from the domain, which may have a influence on these valuation or inputs from there. Then we discuss in the report, right, the valuation rules, the valuer snapshot, the identity of the valuer, disclosure of interest, right, who the valuer is. So you can mention at the end also, you can mention at the front also, in the just after the content of the report also. It is up to you, friends, where do you want to keep. So with this, we are completing the entire layout, friends, here, which is the preliminary part, the main body, and the supplementary part. So if you see the body, these are summed up into these three things. You may, shift the structure here and there, depending upon your flexibility, your understanding of things, and which you feel much more appropriate, or if it is required by certain type of regulations and act, you can change over it. But overall, yes, this is the entire framework of things within which the valuation reporting has to be made. So this kind of completes our reporting layout. So this is our part, friends, as we see what we have to do, how we have to do, what we have done, and how we have represented our work done to the client in the form of a detailed report, right? Then comes the user perspective. Now, up till here is up to the expert valuers territory, that what we want, how we want, and why we want to be represented in this format and shape. I have kept a mirror image of it, right? So this is us, right? And this is the user, end user. So what end user likes to see, how end user like to see. So if you get that perspective, you will be writing and describing your reports better. And you will see that whatever we have discussed here back is all what they want in some form or the other. I'm just going through that point. So report interpretations by the end users and by the consumers of the report, what they see and what they point out. The prima facie, they see at the purpose for which it has to be undertaken, under which regulation and law the valuation was required and complied with, for whom the valuation exercise was carried out, authority, who is the authority, right? For which period, the timeline as we discussed in the initial things, right? What kind of expert or valuer is prescribed in law, if any, for that matter, again. So we are mentioning all these things in our introduction and engagement overview. Now, many people would want to differentiate between valuer to valuer and asking the valuer's qualification and experience. Again, when I said disclosure of interest and valuer snapshot, you may describe it differently anyhow. But it has to be mentioned because people would like to hear and know who you are as a person who is certifying, qualifying, or reporting on the valuation opinion. Whether the valuer has undertaken a detailed analysis of the company, what have historic trends were there, what is the industry sector performance was there, how the company is placed with respect to the competitors, have you analyzed the economic trends currently, it is uptick or it is downtick, right? Key USPs or differentiators, capability of the team that you are talking about, that they will be able to execute these things or not in the past and future, right? So again, this forms a part of their overall introduction where we discuss about the company and economics and the sectors. Then, what standards were adopted in framing the reports, setting the standards and the areas of applicability, defining values as per the standard, defining methodologies and approaches as standard defines, and you are adopting. And if you're not able to adopt, what are the departures from those approaches and methodologies? So, friends, these are all interpretations being taken from various end users and consumers to the report, and then try to put forth. So, we have assembled these things logically into different paragraphs as we have streamlined the report, screenplay. So that is why they are clubbed. Otherwise, in a survey, they were writing it differently, mentioning it differently. But for your end usage, we have clubbed it in a different format for easier to understand. Which approaches and methodologies are evaluated and applied, asset, income market, what projections have been taken, were the cash flows consistent, have they been verified, and discuss the assumptions behind those projection numbers, right? What market multiples or market prices you have taken, are they adjusted to the size and nature of the asset underlying or not, have the financials being normalized, the aberrations, the adjustments in the valuation financials have been taken into account or not. All those things were critical asks from various users, that have we gone through this, have we gone through that before giving evaluation of opinion. So yes, these are certain of the pointers that people consider, that people point out before taking out things and understanding it in much further detail. Okay, in few of the cases, people are asking what basis of value being adopted while framing the valuation opinion, the assumptions adopted are clearly stated or not. I mean, this is one of the more critical requirements, the assumptions, what are we assuming while framing any report under whatever method that we are using is very important, because basis that only we are gauging the entire valuation opinion, right? Whether a company is a going concern or not, it changes the entire valuation output. So that has to be mentioned somewhere or the other, that are we considering a company as a going concern or not? So that is very important. So what assumptions we are taking and why has to be very, very clearly set in the report for us. For us means for the end user to understand it very clearly. Is the expert independent and has no interest in the subject company? Again, comes the point of disclosure of interest, vested interest in the company. So, mark of ethics of independence is there. Any major disclaimers or limitations highlighted by the valuer? For example, you are undertaking evaluation being a technical plant and machinery valuer, and you have not got any fixed asset register from the client. It is one of the major limitation. Why? Because you have to go yourself and visit it and fetch details and do the market survey. The identification of asset becomes challenge in most of the cases. So approximation comes into the being. What if you would have got a detailed fixed asset register, and what if you have not got? So what is the gap? The gap is the accuracy. You will still be valuing the similar assets, but with a lesser accuracy from more of a market assessment basis rather than the acquisition cost basis with make and model, with year of year of construction or year of acquisition. So that matters a lot, because then the onset of accuracy is much more there. But if FAR is not being given to you, you have to adopt for the inspection, measurements, and your opinion matters most. Your professional judgment matters most in those cases. So these are the clear limitations of the inputs that you need to put forth. Obviously, what inputs is the valuers examined in the valuation. So there are certain information and inputs given, friends. In certain cases, we have seen that the inputs may or may not have been shared correctly with us during the course of valuation, but certain things are very critical, which you get to know afterwards. So the client says, "Oh, I have missed it. I mean, it just escaped my mind." It won't work like that, friends, because the information which is very critical from us, it may or may not be relevant or important from a client's perspective, or he may be hiding it for some reason. But I mean, any critical information which is influencing your valuation and you're getting it after your report functioning or writing, you should be very clear about it, whether you have to take it as an addendum or not, depending upon the appointment purpose. There would be certain things which would be happening during the course of your valuation, after the valuation date, and even after your signing date also at times. So be very clear and express everything that you see, that you do, that you give, that you receive, from the client. So you have to mention entire things in the report. Okay. We talked about conclusions, but what people generally see in the conclusions is comprehensive analysis of the qualitative factors, information available, and objective of the report combined. That because of certain things we saw, because of certain things which are apparent, and the input received, and the objective of the report, whether it is a controlling stake or a non-controlling stake, even in case of a sellout of a stake sale, the valuation adjustments have been carried out accordingly, which need to be carried out in the conclusion stage, right? And then detailed valuation opinion above these methods and approaches. It is like a icing on the cake. So this sounds very simple, friends, what we have covered, but trust me, it is not that easy. It is not that easy. It takes years of understanding and experience to do these kind of reports. And if you are doing all these things in detail, mark my words, you will be not less than any biggies or big fours that do report writing under these structured and framed principles and formats. So you will be not less than them in overall report writing or content, or understanding the output. You may beautify it in any extent. I mean, that is the formatting or whatever. But we were just discussing here the content part of the report writing. So we have gone through many Big Four reports because of our interaction with them now and then. But the quality wise, I think if you do all these things, you are not less than them. So this overall covers the interpretation part in last 3 sheet we have discussed. It is what the people expect out of our reports, which again is a similar subset of what we have already seen in the earlier framework of things when we started off. Now, friends, coming to challenges. So I have kept these things specially keeping in mind the challenges and issues that experts like you may face very now and then when you undergo or start doing the valuation exercise. So I kept physical verification as the key challenges. Why? Because when you see the process of valuation, right, you start off with data input. From data input, you go to inspection, and then inspection you go to report writing and assessment. So the main challenge here is the data input. The data input about the basic issues are quantity, rate, and other things, right? Again, these are not pertaining to any particular asset. So I'll appreciate if all my learned friends would understand from their asset classes perspective. From a land and building, the data inputs would be different. From a P&M, it would be different. From a financial, would be a little bit different. So in case of inventory in particular, right, your visit date might be different, your valuation date might be different, and report date might be different. So one has to be very clear that when I'm visiting the company and analyzing the inventory, that date is different and the valuation date is different, then how we are reconciling that? The inventory movement sheet between the two has to be analyzed because you are signing off the valuation date, not for the visit date. This is a practical challenge which one has to face now and then. There are always dearth of access time to you, so you will always have a limited time. When you're yourself, the client will always ask things as of yesterday. Boss, I am very late. Give me valuation quick. These are the information, and please give me report. Do not get into all those things, friends. Take your time. Tell him very clearly, I require 10 days, 20 days, 15 days in doing my valuation work, and get into these details. Obviously, there are a lot of technical inventories, friends, which are hazardous in nature, which are perishable, whose life has been, kind of exhausted. So take the help of any expert if you want to while analyzing and reviewing those inventory items when you visit the site to analyze and finalize the overall valuation to the said inventory. Now, physical verification of the products lying on the shop floor remains a challenge, friends, for a P&M valuer because this comes under the category of work in progress. What stage of operations they are into, what WIP is lying into the shop floor. So, if you are getting adequate data to analyze and understand and absorb these things, it's good. But getting all those things is really a challenge, and you have to corroborate it with different evidences that you go and when you see things happening on the shop floor. Similarly, in case of stores, repairs, and packaging materials, how they have been kept, what is the chances of redundancy there, what is the chances of the models that has been discontinued, and stuff like that. You have to analyze all those things. I mean, these are very few of the items which I just kept it for your perspective, but you might have faced very different challenges also at the same time because inventory is a very evolving subject. It keeps on evolving. So, for example, for an e-commerce inventory, the challenge lies in analyzing the whole host of inventory lying in a big warehouse, right? So, challenges are immense, friends, when you go to physical verification, and it gives you a lot of kick also at times, to understand new ways of doing and scientific way of doing things together and applying your minds towards it. Then comes to the plant and machinery perspective in particular. In case of a P&M valuer, the critical aspect is the fixed asset register. As we keep on talking about the qualitative, location-wise, make and model, year of acquisition, and the cost capitalized in the report. You may or may not get, friends. It is very tricky topic and subject, and hence your valuation challenges will start there from. That if you're not getting the adequate data, how you are taking it further from there on, and how you are identifying the assets during the course of your inspection, how you're evaluating it, right? How you are understanding the usage, the prospective market usage, the obsolescence, maintenance, and the salvage and the scrap value. So all these things will also include into your valuation exercise. Then you have to understand the soft cost of implementation, commissioning or dismantling, in case you are arriving at a liquidation value of any company from a plant and machinery perspective. Then comes the land and building side. In many cases, the type of land is an issue because the reports, the lease deeds talks about something else, but over a period of time, the client has taken a lot of permissions and convert that land into something else. Then documents may or may not be there. So understanding the entire hierarchy or history of the land is very important. Identifying the right is again a relevant point because at times there are no marks or benchmarks given there when you go for site inspection. So the client will say, okay, my site is there. You can see that know tower and besides that tower. So you have to make a point that you are not just fooled by the client's vague answers, but try to see and identify the piece of land and the terms of engagement with the authorities who have given the land. Certain lands, friends, are given on a some uh, deliverable basis, like you have to develop certain things for 5 years. If not, then the land will be taken back by the authorities. Or some land in certain industrial areas are being developed for certain end use, like education or IT structure. And if you're not able to, make the output deliverables in 8, 9, 10 years, otherwise the land will be taken back by the authorities. So all those covenants have to be read with very deeply and properly with incommensurate with the land documents. As far as building are concerned, friends, you get maps, but the maps might be dated. So again, you need to deep down into the measurement category of the buildings and have to map with the building maps to some extent or the other. They might have made some specific requirements, for certain industries. The buildings are created specifically, so you have to understand its reason and cost incurred around it, why specifically so incurred. And the replacement cost is may vary from end usage to end usage. So some of the things that you need to understand from this holistic perspective on a report writing basis, you need to see. So I think we have covered most of the uh, challenges, but challenges are never ending as we speak. And this is Oscar Wilde. I love this saying that a man who knows the price of everything and value of nothing. But yes, I'm more than happy to I would like to answer the queries from the friends from here on to understand more interactive session from here on. Yeah, Nilesh, Nitesh,
Yes, yes, sir. We are
people
just
have a lot of complaints in terms of not giving sufficient time to them in terms of
yeah.
the
No, we are. You are here, sir. You can. People can ask questions. I am making the chat publicly.
yeah.
Just a second. Yeah, the chat is now publicly. Everyone can write their queries.
Okay.
There are some questions which were sent to me like a host. I will start copying that on the main profile for everyone.
Okay, please, thank you. My chat is going privately or still at public?
It's public now.
Okay. Okay. Mr. Pramod is asking that generally we do not get required data. Hence, can our code be based on the data availability? Pramodji, very good question. The lesser the data you will get, the more critical or the more investigative your approach would be. So obviously, if you are, for example, if you are a P&M valuer, if you're not getting the FAR of the plant and machinery, you have to quote higher because then your scope of work is enlarged, and you have to go a step ahead to answer and to corroborate your evidences. So yes, your scope of work has increased, and you have to you have to quote a higher number. Rushabji is asking what is WDB and WIP. Okay, Friends, WDV is written down value method. Written down values. I mean, if a company is capitalizing its machinery at 100 rupees in 2010, so what is its depreciated value in 2020, right? So suppose its depreciated value is 20 rupees, so WDV becomes 20 rupees. And WIP is work in progress, friends. Uh, so when you finalize the inventory, you see raw materials at the entry and finished goods at the end. So whatever goes in between the shop floor into the production, that is the work in process. Parag is asking, is there any variations in valuations from date of visit and date of valuation made? Parag ji, can be. It depends on case to case. There might be a fire, there might be a theft in the company, right? Once you visited and once you're reporting a valuation on a report date. But there might also be difference between the valuation date when you are about to value and the visit date, right? So valuation date might come earlier and visit date might come after that and reporting date after that. So the difference comes there also. Uh, Somebody is asking, I don't understand the name, 702968 is the this thing. If a portion of a building is constructed without approval of a map or extra covered area is constructed beyond the approved map, is it to be noted in relation with? Friends, again, the objective of valuation has to be seen, but you cannot go beyond the legal framework of things. Why? Uh, Even if, for example, there is a building structure standard in which the mezzanine floor is not allowed even, and you see the client has made a mezzanine floor, and over and above that it has built other things. So for that mezzanine floor, they will never get permission. So you cannot value that as a part of your expert opinion. So you have to take cognizance of all those things. Pramodji, yes, you can take a preliminary input and information from the client and ask whether you would be furnishing to me the critical data. For example, in your case, I've asked fixed asset register. So you may ask the client whether you are having detailed fixed asset register maintained or not. If yes, can you give me a snapshot? That will help me in understanding the bandwidth of the work that I need to carry on and hence my fee code. Yeah. Harshiji is asking if any concern is not ongoing unit, how building value for specific industry be valued as no further permissions for such unit will be given to such project. Harshiji, again, if a company is not working or not going concern, it has to be understood from an investor perspective. What kind of investor might invest in such kind of businesses? And I presume that businesses is going concern if the new investor will come in. But in certain cases, the technologies have gone redundant. Whether you will not be able to function that technology in future, in that case, you have to take a contrarian call. Naresh ji is asking valuation done before COVID and now RP wants to valuation after and before COVID. Sir, this is a very dicey subject, COVID. Reason being RP. Achha, so you are doing valuation under IBC. So under IBC, if you are doing a CRP valuation, so you are bound by insolvency commencement date. And if you're talking today, so I presume that your insolvency commencement date is prior to COVID. So it is the COC who can take a call on it, that whether they need a revision or not, and that is how it has to go about. And they may ask you as a separate addendum to the report that what if you feel impact of the COVID on your assessed valuations. So it all depends on the COC call, friends. Yeah. Sir, I just mentioned in my discussion that there is no sample report such. So whatever you prepare around these areas, what we discussed today is forming a sample. I may start from head and end at leg. You may start at leg and start at end at head. It all depends upon the flow. What you consider, everybody can make different pictures, movie, right? As a director. So it is just like do this scenarios on report writing. Dipali ji is asking, throw some light on most debated legal cases which you have come across. Dipali ji, if you read IBBI's quarterly journals, which is published in the IBBI site, I think you need not need anything else. In one of the leading seamless, I think Maharashtra seamless cases, if I'm not wrong, has been discussed that COC can take a call even below the liquidation value of the valuer. So, I mean, all those landmark cases are being discussed in every quarterly journal of IBBI's at IBBI's site. So, you should visit that site very regularly and see all those quarterly journals, and you'll get a lot of updates from there on. Manesh is asking, when scope of work increase from agreed one, what should we do? Sir, your engagement letter should define that given the scope of work, my fees is this, right? If it increases from the discussed above, our fees will be charged pro rata, right? So you should be detailing your engagement letter likewise. Okay. Pankaj is asking, from date of report, how long a report can be used? Okay. Pankaj, again, it depends upon regulation to regulation, under what regulation you are referring. But having said that, every report needs to be current, because you never know, what will happen after you furnish the report in the company and how it changes the overall valuation criteria for the end user. So yes, it has to be very current. Srinivas is asking, in land and building valuations, generally there shall be a large gap between actual market transactions and documented value as per registered title deeds. It will be difficult to produce documentary evidence of his opinion of value which he gives factoring many relevant parameters. What additional checks are required? Okay. Srinivasi, I mean, there are multiple facets to it. This is believed to be an area of professional judgment. Yes, the guideline rates can be different. The asset bought at what rate in whatever year is can be different. Prevailing market transactions can be different. Now you have to assess the active market participants of similar type of asset, of similar size of asset, as a land and building valuer. See, the challenge comes to you guys is twofold. One is the location, and another is the size. So if your plot is a larger size, 20 acres, 30 acres, 50 acres, then you might not fetch the market comparables of that size of plot. But you can still indulge into some market assessments intelligently, right? For example, we did a valuation of a company which is 150 acres in land area, right? So it is very hard to get similar land area again. So we keep on doing our market survey and asked, lot of people in the market that what if we collect agricultural land and make it 100-acre land? What will be the conversion charges? What will be the, permission charges that we need to pay and all those things? So with all those due respect to the, surveyors, they asked all this question to large land aggregators and builders. And then we came to a conclusion that, okay, if we aggregate all this land and do all these conversions, an XYZ value would be coming into the picture. So basis that, we have taken a market input from the survey assessments. So yes, you need to do all that. Up to what extent in terms of percentage of horizontal and vertical construction deviation can be considered for valuation? Sudhakarji, it cannot have a general answer, because again, the objective and purpose of valuation, what you are doing has to be mentioned. But frankly speaking, whatever permissible, you have to write. Whatever is not permissible, you have to clearly mention the report. Thus, although client is constructed to, let's suppose, 10 stories, but as per FAR, FSI, only 7 stories were allowed. So you have to mention this fact for sure on a bold lines, because this will influence your valuation. You might take valuation up to 7 floors. You might not take other 2-3 floors, right? All these things have to be mentioned in your report. Mr. Rajendraji is asking, what is the difference between the reports prepared for bank purpose and for share purpose, or differentiate between contents in the above two reports? Rajendraji, again, bank reports are driven by their own templates and formats, right? But the other reports where you are left free to professional judgment, I think you have to comply with these valuation rules. But I will suggest that for whomsoever you will issue a report, you as a registered valuer has to comply with the minimum valuation rules, structure of reports and content of reports, even if you are issuing for any purpose. That is for sure. Mr. Bhardwaj is asking, can we charge additional fees for COVID effect on an old submitted report? Bhardwaji, but obviously yes, because your scope of work has enhanced, you may charge it add on, because it was not the scope of work, then you have taken the assignment. Nitesh ji, Grover ji is asking, it is said value lies in either no two versions will ever be the same. So, what is the acceptable divergence in certain legal cases? Two values have difference of 10 times. Very nice question, Grover Saab. Uh, See, the idea or the framework, why it has came into being two valuers. See, the difference should be left only to the professional judgment. Like suppose one valuer are you and one valuer is me, right? So we have to, if the information given to us, both the valuers are same, and if we are following almost similar approaches and methodologies, the difference could be only resting on the professional judgment. So you will take a professional judgment in different way, I will take it in different way. So typically it should not vary for more than 10 to 15 percentage of the overall value. But you said 10 times, I mean, it is way different, right? It cannot be acceptable. An asset cannot be 1 rupee and 10 rupees at the same time. It can be, here and there, marginally, because two valuers are doing the same work with the same information for the same objective. So it cannot be that much of a difference. I think somewhere in some cases it has been told 15% in some of the, I'm forgetting the case law, it states up to 15%, 1 5 is an acceptable range. But some big fours also take a cognizance of 20% also. It depends upon case to case. Naresh is asking, generally we take 20% and can we go up to 55%? Naresh, it depends upon the underlying asset. If the underlying asset is trash, the whatever percentage can change. There is no fixed percentages. In generally in some bank valuations, you might see, there is a gradient variation between market value and realizable value and distress value. But in actual valuation, friends, there is no same percentages that goes for any company within same industry. So you have to do as per case on case basis. Mr. Mangesh is asking, in case of revaluation after 3 years, it is necessary to visit the site if previous report is done by us or not. If you are getting a fresh mandate, you need to visit. What if there is no factory at all? What if the company has double the capacities? What if something different might have happened? 3 years is a long time. So visit is must. Mr. Emmanuel is asking how many times. Again, generally people say, and there is written in somewhere is I think 8 years is the time frame for which the records have to be kept as far as India is concerned. Mr. Groves is asking for the controlling stake and the premium. Like it all depends upon the transaction. I must say, Mr. Grover, that if you're taking a controlling stake, then you have to use all those special adjustment in the conclusion that I mentioned in the report. Discount or premium that you need to make depending upon the underlying transaction. Of course, you should take that. Mr. Abhijit is asking, can we add unutilized FSI in the valuation report? Again, it depends upon the purpose. You have to understand what purpose it is being used. You can disclose it and you should disclose it that this is the unutilized FSI. But then how you will value that and how the objective of that report changes, that has to be seen from a overall objective of the report. Whether it is going for a sellout, whether it is going for an M&A, whether it is going for a compliance purposes, or whatever things it is being furnished. So, friends, I mean, it all depends and requires the purpose and timelines under which you are valuing it. Mm,
Gagan sir, can you close your screen sharing? We can have a group picture of everyone while you are taking this.
okay.
Uh,
I'm closing my screen share. Okay.
yeah. Everyone can hear the, I think, just a second. There are many pages actually, three,
Okay.
4 pages. Yeah. You can continue, sir, if there is anything.
Yeah. Yeah. Happy to answer any other questions, friends. Otherwise, the PPT would be mailed by Nitish to all of you by the end of the day. Vanita ji is asking, no, acha. The, it is the duty of a valuer to identify the land as prevailing law for bank purposes. Again, bank is, having their title search report lawyers separately. So they are the ones who give the legal side of the picture. And we as a valuers generally do not have that scope of work. But again, it depends upon how you have structured the scope of work while arriving at the overall, intention of the client. So if you are defining the scope of work, you have to showcase that you are not doing these things under your scope. So if you're not doing the legal side, so state it in the report, and you are not required to go abide that that you have to go for the said authority for the company. So you take it on the face. Sudhakar ji is asking, sir, one vacant site of extent of 1,000 square yards situated in a developed residential area, but the site vacant site is not an approved layout. Sudhakar ji, whatever you need to, value a land in a, particular way and format has to be taken, needs to be procured. There is no second thought about it. You know what happens with any single evidence, the entire value of the land changes. So that might be a guiding force to value such land. So yes, whatever it takes to get that basic inputs from those land, you should take that. Rishabh ji is asking, financial side of the company should be verified by a landowner valuer. But what financial side you are talking, Rishabh ji, not able to understand. But yes, if you see the balance sheet, you need to understand at least the balance sheet, where your asset, underlying asset you are valuing is mentioned. Manish ji is asking, when an RP changes, can they change valuers without information? I think they cannot. They should, if you are appointed, which means you are being notified and put in the minutes of meeting, and COC has approved you. So I don't think, if there is any other information underlying which is not clear either to valuer or to the other people. Yes, Rishabh, balance sheet, yes, you're right. You need to understand balance sheet, at least where is your land located. Nitish ji, Grover ji, I think one more Nitish Grover is there. So, okay. Okay, valid question. You should sign the reports which you feel are appropriate, are complete, and are abiding by the rules and regulation under which you are signing off. So you are signing off as an IBBA registered valuer, but obvious you need to adhere to these reports content thematically. Once you sign it, that means the report is being conducted by you, and it is meant that it is coming from you. So make sure that all these contents and disclaimers and disclosures are very clear, upfront done, and you go through it accordingly. Yeah. Otherwise, my details and numbers are always there in the presentation. We are happy to reach out to us over a mail or an SMS, and happy to help you across all these lines, and happy to share whatever we have learned in these past few years. And thanks to Nitish Bhai for giving us the opportunity to share whatever we could have done so far. So good.
Thank you, sir. Thank you for sharing your practical experience with us, because theoretical we can do, but this practical experience takes a lot of time.
Yeah.
Thank you so much.
Pleasure.
Thank you
Pleasure,
all.
friends. Thank you, all of you.
Thank you everyone for being part of this. We have our next CEP session on 6th June on IVS, International Relations Standards. We will just share the pattern. If anyone want to register themselves, they can go through the link. Yeah, here it is. If anyone is having any queries or something, they can just text us on WhatsApp. Thank you.
Thank you.